And for more on JD.com and the other Chinese e-commerce companies expected to list in the U.S. in the near future, we're joined by Mark Otto, partner at Streicher Company. Mark, good to have you on the show. Thanks for joining us.
Oh, thanks for having me on. It's an honor.
It's a huge day for JD.com. The stock closed up 10%, a very warm reception by investors. But actually, the company has not been performing so well. If you look at its statements, it's reported a loss for the last 5 years in a row. Last year, for instance, the company lost $8 million. But despite this, investors seem confident. Why?
It's all happening to the growth story for China, particularly with the e-commerce sector. Less than 50% of the population is utilizing the internet. So, that's based upon here in the United States, there's over 80% of the people utilizing the internet. So massive growth in China. It's also supported by the fact that the Chinese government is looking at things like urbanization, which is certainly going to help the e-commerce sector as well.
So this is really about tapping in to the Chinese consumer and the Chinese online consumer. So can we extrapolate that notion and expect the other e-commerce IPOs that are slated for the future to receive a similarly warm reception?
Well, I think it's on a case-by-case basis. So what we're seeing out there is that some of them are actually opening at the lower end of the target range, and others are actually breaking through the upper end. One thing that isn't common, though, is when they are falling under pressure, it does seem as though they are getting support at that lower end of the target range. Going forward, though, I think particularly for some particular e-commerce companies like Alibaba, of course, is the elephant in the room that everyone's always talking about right now. I think it's going to be a big measuring stick. I think that going forward, there's as many as 30 Chinese companies that may actually come across this year. The pace at which they actually come across may be dictated by the performance of Alibaba.
But we're waiting for the Alibaba IPO. That is the big, as you say, elephant in the room, the big expectation. In the interim, investors do seem to be responding quite favorably to Chinese companies, whereas in the past they seem to have some concerns about their accounting practices, about credibility. Have those concerns been allayed?
I believe they have. In 2012, we saw a really tough year for China-based U.S. companies. There are approximately 50 Chinese companies that were delisted for fraud allegations. So since then, what we have seen, though, is in 2013, particularly in about the middle part of 2013, macroeconomic data in China bottomed out and turned to the upside. The hard landing was taken off the table, and these stocks actually exploded to the upside. So particularly in the e-commerce sector, Baidu, Sohu, and Sina saw gains of approximately 65 to 75% for the year of 2013. So coming into this year, it's actually a bit more challenging. Macroeconomic data in China has been somewhat disappointing, and we are seeing a tech sell-off going globally.
It may be disappointing, but it's still the best data out there. And as you said, China has only 50% of the people connected online. That was actually mentioned in JD.com's prospectus. And according to some research firms, iResearch Consulting Group in particular, online shopping is expected to grow by about 27% each year. Does your research concur with that outlook for the growth market?
I've seen on the low end as low as 18%, and that would be the middle to upper range of what I'm seeing with the data that I'm seeing out there. So you can't argue with the numbers. It is the growth story with the e-commerce sector in particular, and it does seem as though the government is going to support this sector as well.
Now, in the meantime, whilst there's been this interest in Chinese e-commerce stocks, especially as listed on the NASDAQ, overall tech stocks have lost some of their momentum, so-called momentum stocks with very high price to earnings ratios. Are we seeing U.S. investors tap into this as an alternative to get that kind of growth?
Absolutely. I mean, it's been a tough year for techs here in the United States. I mean, a lot of the bellwethers that people see correlation from the Chinese to the U.S. e-commerce stocks and social media stocks, a lot of the bellwethers like Yahoo and as far as Amazon and Twitter, and then you'd have to look at LinkedIn, are all down significantly year to date. So it is a challenging year for the tech sector here in the U.S.
Is that going to impact these Chinese sort of tech online stocks, though, do you think?
It can, and what we are seeing is that some of them have actually cut down the money that they're trying to raise on the IPOs. This could be actually a defensive play given the environment they're coming into right now.
Let's talk about Jingdong. That's the other big Chinese online retailer. It has an IPO slated in the near future. What's your projection for that?
Well, I think what we're going to see right now, it seems the analysts are getting the valuations correct. It is a case-by-case basis. Some are coming in at the lower end, some are going through the upper end, which isn't uncommon here in the United States. So I think that going forward, though, you have to see the performance after the first couple of weeks, not in the initial rally.
Right.
If
Not
they
that
do
initial pop,
continue
yeah.
to support on the lower end, that's actually a very good signal going forward. I think that I'm hopeful that macroeconomic data will start to improve as the year goes on domestically in China. I think that as we get later into 2014, if they look like they're not going to hit their growth targets, I think the leadership in China is going to implement more change. Not necessarily stimulus, but definitely change.
Okay, so how would that impact the IPO of Alibaba, for example?
Well, Alibaba, I think that when you talk about the biggest ever, you're going to bring out all types. You're going to have people casting stones saying, it's definitely going to be bearish, or
Will it
you're going to
meet
have
those
people
expectations of the biggest ever?
Well, I think it's going to definitely be one of the biggest ever. I think that what's unique about Alibaba is the fact is they do have 6 underwriters, 6 very large underwriters, and there isn't a lead underwriter yet. So I think it actually could change the IPO process going forward simply because of that. So it is a massive undertaking, and we're hopeful that it's going to land sometime this summer.
All right, we're all watching that very closely. Thank you so much for joining.